Welcome to Cannabis Accounting's tax web series sponsored by CMATES.org. My name's Gorden Gates and I'll be your moderator today. In today's video presentation, we'll be talking about the American Opportunity Act. Each year as CPAs and enrolled agents, we cringe at the thought of what the new tax code changes will bring. This year's no different, with the addition of the Obamacare forms and further due diligence requirements for the Earned Income Tax Credit. Fortunately for our clients, our tax professionals spend a minimum of 60 hours per year learning about the new tax laws and the impact that these will have on your tax returns. Staying on top of important changes can also help you save more money and as well avoid any headaches and hassles. Now, here's some of the key changes to the college tax credit that we'll be talking about today. From a quick overview, the American Opportunity Tax Credit, which was previously called the Hope College Credit, is currently valued at $2,500 per student for 2014. Now, this is up from $1,800 when it was initially offered in 2008. And obviously, we realize that this doesn't come close to covering some of the college tuitions in the marketplace today. However, it's a great opportunity to earn a credit on your tax return. Because a tax credit reduces your tax bill dollar for dollar, this basically means Uncle Sam will give you up to $2,500 per year for each qualifying college student in your family. Using myself as an example, I have 2 kids in college. I can get up to a $5,000 credit back on my tax return. Now, understand that a deduction simply reduces your income, which ultimately determines your adjusted gross income and taxable income. A credit, however, reduces your tax and in some cases provides you with an additional refund. Now, credits obviously are far better than any type of deduction that you can take out there. And unlike the old Hope Credit, which was available only for a student's first 2 years of college, the American Opportunity Credit can be claimed for all 4 years of post-high school education. You get the maximum credit if you spend at least $4,000 in qualifying expenses, which now include the cost of books as well as tuition and fees. If you're a lower income taxpayer and the credit is worth more than your tax bill for the year, up to 40% of the credit, or as much as $1,000, will be returned to you as a tax refund. Now, the old Hope Credit could wipe out your tax bill and zero everything out, but they never gave you cash back. New in 2014 is an opportunity for you to get as much as $1,000 of that back to you. There's also good news for some higher income taxpayers. New rules greatly expanded the number of families who qualify for the credit. The old Hope Credit was phased out for single taxpayers with adjusted gross incomes of more than $50,000, and it disappeared altogether at $60,000. For couples filing married jointly, now the income there is between $100,000 and $120,000 of AGI. AGI is basically taxable income before subtracting personal and dependent exemptions and standard or itemized deductions. Now the new credit, as you see up on the screen, for single and head of household is between $80,000 and $90,000 as the phase out, and for married filing joint, it's $160,000 to $180,000. Now, what if you've already used the Hope Credit before? If your child's a junior or senior in 2014, you can still continue to use the American Opportunity Credit for these college expenses. So the big question is, who qualifies? The other rules for qualifying for the American Opportunity Credit, they're the same as what the Hope Credit used to be. Okay? The student must be enrolled at least half-time at a credentialed school. Okay? You can claim the credit for expenses paid for yourself, your spouse, or a child who's claimed as a dependent on your return. Okay? If the student is claimed as a dependent on a parent's tax return, the parent gets the credit, regardless of who actually paid for the qualifying expenses. Now, the changes in the Hope Credit don't affect the Lifetime Learning Credit, which applies to higher education that's not covered by the Hope or American Opportunity Credit. For education that's taken after the first 2 or 4 years, or for classes, say you're taking a classes less than half time in college, or you're not pursuing a degree, now you're able to take the Lifetime Learning Credit. The Lifetime Learning Credit, which can be claimed for graduate school as well, for example, or as I said, for a single postseason high school class, it's worth up to $2,000. The credit's actually 20% of the first $10,000 of qualifying costs. The phase out for this is lower than the new American Opportunity Credit. For 2014, this Lifetime Learning Credit gradually disappears as AGI rises from $50,000 to $60,000 on single returns and $100,000 to $120,000 on joint returns. Quick tax tip: Be sure that your student obtains what's called a 1098-T form from his or her college, as they'll need this to complete the American Opportunity Act credit. What's stated on there is the year that they attended, whether or not they were half-time or full-time, and how much they spent on tuition and expenses, etc. If you need additional information, see IRS Publication 970. They've got a lot of information out there about the American Opportunity, Hope, and Lifetime Learning Tax Credits, or contact your local tax professional. Other new tax laws for 2015 are worth learning about too, and we strongly suggest you take a minute to review items that may impact your 2014 tax return filing. We know you have a choice of tax professionals out there, and we appreciate you entrusting Cannabis Accounting with yours. Please visit our website at www.cannabisaccounting.com or give us a call toll-free at 844-420-8299. Thanks for stopping in, and make it a great day.